Good morning, welcome, and we're ready to go. I know we have people following the webcast as well as here, so thank you for joining us. For those on the webcast, I'm Dig Howard. I will give an overview of some of the highlights of the year, some of the progress in the last year. Then Brent will talk about the balance sheet, the P&L and the cash flow, and then I'll come back with to finish with our guidance and a brief overview on our strategy. But let's get underway. So the highlight clearly for the year was the growth in services and sound processes, and that continues a several-year trend of year-on-year growth from our services business, which is now 30% of our revenue. It was obviously a slower year for cochlear implants, both in developed markets and in emerging markets. I will talk on the next slide a little into more detail on those, but I think we go into F20 very well positioned in both developed and emerging markets and expect to see strong CI growth through F20. Very importantly, we are running the business with a long-term view of investing to drive growth, and that we have this very significant opportunity that we've talked about both in emerging markets and in adults and seniors in the developed markets. We made continued investments in the last year in furthering our strategies in these areas. And some of the highlights of that was continuing to grow our investment in R&D, so up nearly to 13% of sales in the last year. I said at the half year that we had a very strong technology pipeline over the next 18 months. We've clearly launched some important products in the last 6 months. We still have a strong pipeline looking forward over the next 18 months, and I'll talk to that when I come back at the end. The work that we've done on direct-to-consumer continues to be a very important part of driving consumer awareness of cochlear implants and candidacy. We continue to expand that across the globe and to see both referrals and surgeries coming from that. And increasingly we are doing some work on the hearing aid channel that we know in the adults and seniors segment. The majority of our future potential customers are in the hearing aid channel. We want to work to build a clinical path from hearing aids through to cochlear implants so that there is a much more seamless transition for people with hearing aids with severe to profound hearing loss to cochlear implants if they meet candidacy criteria. We've made some good progress on that in the US particularly over the last year with our Cochlear Provider Network, and we continue to learn more about that channel and the opportunities that that channel presents for us. Market access is critical, that we continue to expand the indications and expand the availability of funding so that people who will benefit get funded for implants. We saw a few years ago in Japan the expansion of indications, and Japan again performed well, strong cochlear implant system growth in the last year. That's the second year in a row since the expansion of indications. As we announced earlier in the year, the UK indications were expanded in March, effectively doubling the size of the potential market in the UK, and we expect that to see an uplift over time in cochlear implant surgeries in the UK. We have a number of applications in with payers around the world for expansion of indications or expansion of funding based on evidence of the efficacy of our products and quality of life improvements. So we would hope to see expanded funding and indications continue over the years. And importantly, now a few years past the launch of the 532 implant, we have completed a significant benchmark study using the CI532 and Nucleus 7. So that study we expect to publish in the next few months. It's been a comprehensive study. It showed both significant improvements in hearing performance for people moving from high-powered hearing aids to high-powered hearing aids to a cochlear implant or a cochlear implant and a high-powered hearing aid. And it showed very significant increases in customer satisfaction with their hearing outcomes in a whole range of listening environments, including using the telephone, listening to music, listening when there's background noise. We showed some of that data at our Capital Markets Day earlier in the year. That study will be published in the next few months and we'll have all of that data available. But importantly, there's also improvements in quality of life data. in that study. So that is important for payers to be able to show improvements in quality of life, and the improving performance for people in criteria from hearing aids to cochlear implants is an important part of building this clinical path from hearing aids to cochlear implants as well. And we finished the year in a strong financial position that Brent will talk about. Our balance sheet remains conservatively geared, our dividends continue to grow, and we are well set up for a strong year in F20. So let's now move on to look at implants. I'll talk about developed markets and emerging markets, because clearly our overall implant units fell 3%. Our developed market units were in line with last year. Emerging market units were down. So let me dig into each of those a little bit more. So firstly, in developed markets, we talked about this at the half year. We lost share, particularly in the US and Germany. Now we have now launched the Profile Plus implant in May in Germany, in the last week of June in the US. We are seeing that we are regaining share in those markets since the launch, and that does give us confidence for strong implant growth as we go into F20. We continue to roll out the Profile Plus country by country as we get registration or as we get regulatory approvals, because it is an important product in our portfolio. The other thing we said at the half year was that we had seen in Western Europe that our sales were flat, and that we were running into some funding caps and indication constraints. We also said at that time that when we look back over time, we see that there had been long run growth in Europe, but individual countries had moved up and down over time. That growth was not necessarily consistent across every country. What we saw in the second half, and leaving the Profile Plus aside, but in Western Europe, excluding Germany, we saw high single-digit growth in cochlear implants, indicating that those Western European markets grew in the second half versus being flat in the first half. So that's certainly a good sign as we head into F20 that long-run growth in implant numbers in Western Europe, we believe should continue. So in developed markets, it's really we're seeing that we're regaining share. Profile Plus is a very important product, and so therefore we expect a strong F20 for developed markets. Now, emerging markets, there are really four factors in emerging markets which led to our decline in sales for the year. And we think that when we look at those factors, when we look at F20, we believe the underlying market for cochlear implants in emerging markets continues to grow and will grow in F20. But as we've said several times, there is inconsistency in that growth for a whole range of reasons. So let me go to those four things. The first of those is China. So in the China tender, we had 700 fewer units in F19 compared to F18. That's because we didn't win a tranche of that tender. So obviously cycling that through. In both Turkey and Argentina, which are two important emerging markets for us, macroeconomic conditions, as I'm sure you are aware, were bad in both those countries, significant currency devaluation, recessions in the countries. We saw a very, very significant decline in our sales in those two countries. Just those three things together account for more than our total fall in cochlear implant sales in the year. On top of that, there are two other factors. One of our long-run strategies in emerging markets has been to increase our presence by going direct in some markets, by putting more people on the ground. Now, in the last year, we went direct in some key markets, emerging markets. You can see that in the balance sheet. We've had to acquire some of our distributors to do that. Now, when we do that, it's the right thing for long-run growth. And if you look at the Middle East and Eastern Europe, which were two of our standout regions for emerging market growth in the last year, we invested people on the ground in Dubai and then in Vienna for Eastern Europe 3 and 4 years ago. We're seeing the benefit of that come through now. But in the year when you make those changes, there is some short-term instability, and particularly when we're working through distributors. When we replace those distributors, we end up buying back a couple of months of inventory, so we have a few months where we don't sell. So we had that as the third factor in emerging markets, of missing a few months' sales in some key markets as we took back inventory from distributors. And the fourth factor is that we did win some very significant tenders through F19 in some emerging markets. Those tenders didn't ship in 19, we've started to see some of those ship in F20. So we're carrying a good order book through in emerging markets. So we think all of those factors that hit in F19 for emerging markets, we think will either cycle through or resolve more favourably, leading to growth in emerging markets for implants. So we are confident of our Cochlear implant system growth for both emerging and developed markets going into F20. We now go to services. You can see in the chart here that we have had good, consistent growth in services over the last 5 years. That's been on the back of a few things. It was firstly Kanso. It was then the strength of Nucleus 7. It's also the work that we have been doing to improve connection and engagement with our customer base. You can see now that we have over 140,000 members of Cochlear Family. That's a 40% increase on the last year, and that's an important element for our future engagement. Now we are with services starting to get later in the cycle of Nucleus 7. So we expect services to continue to grow, but we wouldn't expect the growth rates that we have seen in the last few years to continue as we look forward. And you can see that if you look at first half, second half, slight slowing of the growth in the second half, but also very big comparables for us from a services perspective. So very good long run opportunity, 30% of our revenue now. We continue to engage and connect, which helps drive the underlying growth, and continue to have a very strong product portfolio, which encourages people to upgrade. On to acoustics. Now acoustics, 12% of our sales, down 1% in constant currency in the last year. The cause for that was a reduction in the upgrades that we saw. We're now a few years past the Baha 5 system launch, so we've seen a cycling of those of the upgrades coming off. But importantly is the Osia implant system, which we plan to release later in F20. We've been conducting trials on that product through this year. The feedback from those trials has been very positive. It is a product which really extends and expands our acoustic implant portfolio, and the acoustic implant opportunity is very significant. We think this product helps open up that opportunity as an addition to our product range. So more to come on that as we go through the year, but very, very positive feedback from the clinical study that we have taken. Now just quickly through the regions, just to show the regional performance. You can see in the Americas sales down just slightly. That was both a function of Argentina in Latin America and in the US, good services growth, but not as strong a growth, or the CI number we lost share, but as we said, with that launch in the last week of June, we are regaining share since the launch. In EMEA, you can see consistent growth there. Obviously services was a stronger contributor to growth than Cochlear implants in the last year, but again in Germany with the launch in May, we have seen us starting to regain some market share, albeit early days in the rollout of that launch. And then Asia Pacific, get 2% growth, so cycling the 700 units in China tender. But in Asia Pacific, our core of our strategy there is to put people on the ground to make sure that we are well positioned for long run growth, because there's absolutely long run growth in Asia Pacific. We've got to make sure that we are very well positioned, and we are investing to do that. And continue to see good performance in Japan, as I said earlier, on the back of the indication expansion 2 years ago. So with that, I'm going to hand over to Brent to talk through some of the financial results, and I'll come back at the end to finish with strategy overview and our outlook.
Okay, thanks, Dig. So Dig's already touched on the P&L on the revenue side, so I'll go to the P&L and focus a little bit more on the highlights there. You know, as Dig mentioned, upgrades is the highlight this year on the revenue line. So underneath that, there's a 17% growth in the upgrade business in sales, and that's been diluted by the CI. But we're really happy with this result, given those headwinds we faced that Dig mentioned before. We've really managed the business hard this year, and you can see that we did not deviate from our long-term strategy in investing in the sales and marketing in the R&D area. And I think that's a really good achievement given those headwinds we spoke about before. So that you can see that 9% growth there in the sales and marketing and R&D over last year in constant currency. And we've done that through working hard on the savings in admin. We actually went down in admin. So we've probably reviewed about 200 contracts in the last couple of years and put out some good cash savings in those contracts. So that's coming through now, which I'm really happy to see. But further up, you can see that improvement in the gross margin. And that's about that 3 percentage points. It's worth about $40 million, which we've reinvested into those areas that you can see there. The other good work we've done is managing our interest and our cash flow really tightly, and some good tax savings as well. Part of that's due to the 12 months of the US savings versus 6 months last year after Trump changed those back in December 17. And there are some non-cash items as well, which brought that effective tax rate down. So that would probably be closer to 25.5%, probably about 26% going forward. So overall, we've worked the business hard to make sure the long-term strategies don't suffer, because it's important that we keep with that strategy. You've already seen the results of the innovation fund, so we're just going to be focusing on the net profit, on the underlying amount there. 266 will be with the base that we use for our guidance for our growth. Moving forward to the cash flow, another great year on our cash flow. 296 million there. That's about 111% over the 266 underlying profit. That's a good result, mainly because of the tight management of our debtors and so forth, which you'll see on the next slide, which stayed about the same year on year despite sales going up. And overall, in the balance sheet here, you can see how that's been possible. Creditors went up a little bit because towards the end of the year, we're building our inventory with Profile Plus, so that's the reason why they went up. But and the other items that we've invested in there, in China, and some of the other investments Dig mentioned before, you can see them at the top of the screen there. The GN collaboration, which we announced during the year, the 10-year agreement there. The investment in Nyxoah in the first half is towards the bottom there. So and as Dig mentioned before, we did invest a little bit in some of those distributors in the emerging markets. So overall, the balance sheet and the cash flow are in very good shape, and that's enabled us to keep our net debt position. It's only gone up by $10 million despite spending about $140 million on CapEx items and investments. So I think that's a pretty good achievement, and we're very proud of that. You can see over the last few years, we spent about $400 million in CapEx and other investments in Cycle and Nyxoah and so forth, and our debt hasn't gone, it's actually come down over that period. So we're very happy about that, and we continue to manage that very tightly. Part of the reason why that interest came down as well was because we did renegotiate that loan with the SEK loan in Sweden, which had a low interest rate. But overall, it's just managing it really tightly and keeping that debt down. All of that has enabled us to pay a 10% dividend year on year, and you'll see that. You can see that there, 70% payout ratio, and we're very confident going forward that has enabled us to pay that dividend. Finally, in terms of Dig, you're going to go on to the guidance. I think you're going to have that slide there with the 20. There's a really good presentation that we've included with the results about our strategic outlook. It goes back for 20 years and showing the history of the company. I would encourage you to look at that as well. And Dig's got a couple of those slides to look at too.
Thanks, Brent. So yeah, it's a quick recap of our strategy before we go to questions. So remember 3 things that we are trying to do: retain market leadership, which is really about our product portfolio and our customer service. We have to grow the market, which is awareness, access, and clinical evidence is important. That's where the 532 study is an important part of helping us grow the market. And we are aiming to deliver long-run revenue and profit growth by getting operational improvement, reinvesting that in growth or in technology, maintaining our net profit margin as we go forward. So our product portfolio is core to our competitive position, and we have advanced that portfolio over the last year, and particularly in the last 6 months with the Nucleus Profile Plus. Nucleus 7, we've added forward focus, which helps people hear much better in background noise, and we've got some very good clinical results on that. Remote Check is in a pilot stage in the UK, enabling people, as we've said, to be able to do their checkups at home rather than coming into the clinic, so relieving clinic capacity, lowering the overall costs of the intervention. The ECOG research platform is now available, and Google have announced that they will be putting the Asha protocol into their next generation of Android phones. Our system is already enabled for that, so once those phones are available, people will be able to stream from an Android phone to Nucleus 7 as well as they can from an iPhone to Nucleus 7 now. We think about, as we've talked about, we think about our strategy in terms of 3 market segments, with adults and seniors in developed markets being the most significant opportunity for us, with only 3% penetration, people living longer, an ageing population but still losing their hearing at the same rates. So very significant opportunity for us. Children in developed markets, as we've said, highly penetrated, but important that we hold or grow our share in that area. And remembering developed markets make up 80% of our total revenue. And then children in emerging markets is absolutely an opportunity for long run growth. And we've been very clear that we will invest to put people on the ground, to expand funding, to educate surgeons, build the infrastructure around audiology and therapy so that there is long run growth and effective outcomes in emerging markets. Very important part of that is how we invest, and the framework for how we invest is that we want to maintain our net profit margin so that we can continue to pay a good dividend. We want to maintain a conservative balance sheet. Within that framework, we then want to generate operational efficiencies and invest those into the business. As Brent went through, we've done that in the last year by expanding our R&D, expanding our sales and marketing, and building things like the factory in China, which set us up with more capacity into the future and enable us over time. We want to continue to bring our cost of production down and work on our operational efficiencies to drive more money back into reinvesting into the future. As Brent said, we've published a strategy document that has a 20 or even 25-year view of our financial history. It's up on our website today. We provide it there for you just so that you get good background into the long-run financial history and can see the long-run trends, which we show a few of here in our business. So just before we get to guidance, then a reminder, 3 areas of growth. Our cochlear implants, I've talked about those. Service, which has continued to grow well over the last several years, and acoustics, where again we see long run opportunity and expanding our product portfolio to really grow that acoustics segment in the long run. So now moving to our guidance. Guiding for net profit of 290 to 300 million, which is a 9 to 13% increase on our underlying profit, the 266 million for this year. Strong growth in cochlear implants is the core driver of that uplift, as we said, and that's both in developed markets and in emerging markets for the reasons I outlined earlier. We do expect to release the Osia system during F20, so expect some contribution later in the year from that. Our capex will go to 180 million this year, and that's really driven by 2 things. The majority of the China factory building and fit out will be completed this year, and in Denver, because of the growth of the business, we are moving to a new and larger office, and the capex for fit out of that office is quite significant and will happen this year. So in Denver. So, and we then expect to go back to about 100 million in capex in F21. Be aware of the lease accounting change that comes into effect this year. That will reduce our pre-tax earnings by about 2 to 3 million this year. That's obviously included into our guidance. We have excluded any revaluation of the innovation fund, as we did from between our net profit and underlying profit this year. This guidance doesn't include any revaluation up or down in that fund. As we've said, we want to retain our net profit margin, so we expect to grow revenue well this year, hold our net profit margin, reinvest that difference back into business as we get more operational efficiencies. And we've been working off, our guidance is based on exchange rate of 70 cents for the Australian dollar, 62 euro cents. Spot rates are below that today. We will see where they go over the year, but given the volatility there, we thought it was important to set out the rates that we had used in providing that guidance. So we'll finish up there and now open up for questions. And Andrew, straight first up, we'll put our financial history up on the slide for you to look at.
Thanks very much. It's Andrew Goodsall from MST Marquee. Dig, just obviously you've had the benefit of the Profile Plus in the market since May, and so a couple of months in. Just trying to get a sense of your feeling that that's given you back the market share that you perhaps had before, I guess a blip with the MRI type issue.
So look, it's we've now a few months in Germany, about 6-7 weeks in the US, and this has been very well received both by consumers and by professionals. We are regaining share in both those countries.
And would you sort of characterise that as basically back in the runway where you were, or is it still a work in progress?
Look, we're still rolling out, but we, as I said, we're not in all countries yet. But in the countries where we are, particularly Germany and US, two big ones, we've seen a lift up. But even the US, we've seen a lift up in our share, lift up in our sales. In the US, we still continue to add hospitals registration. But very pleased with the reception and how that product has rolled out and what we're seeing in our sales.
Okay, great. And one for Brent, just in terms of the accounts, could I just get a sense of net movements in provisions? Looks like it was sort of a bit over 7, and contingent considerations like cycle. I think first half you had 5 there. So
in terms of the provisions, we've also got, we had that change in the accounting standard last year, the deferred revenue. That's one of the big contributing factors to it. You see in the notes, the cycle remaining provision is about 19 million or so, and that consists of a little bit of the referrals as well. And Dick can talk to how we're going to treat that for the next year.
what would be the net movement in those across those items then, year on year, in both provisions and contingent?
So, I mean, year on year, you've obviously seen how much we've released for cycle this year. So that one's come straight to the P&L, about 10.8, which we've called out, leaving the 19 or so for next year, if it's just talking about cycle. And all the other provisions, is, there's heaps of ups and downs, and whether it be deferred revenue or employee provisions and whatnot, things like that. So,
okay.
We've also outlined on the capital employed where some of that's gone on the other side as well, on the intangible assets as well. So on the other side. So things like the GN and so forth.
So of that 19 million for cycle, there's 13 million of that which is for as part of the revenue earn-out, and the other 6 is for referrals. In setting up our guidance and our budgets for this year, we have assumed that cycle will meet its revenue targets for and earn that 13 million. If, as happened this year, they didn't achieve those targets, then that 13 million comes back through the P&L. And if that happens, we will look to do what we did this year, which is to pull forward some spending to invest into the future. But at the moment, we assume that cycle will meet the revenue targets.
Thank you.
The referral ones have another year after that. So they had 21. So that's why there'll be a little bit left at the end of next year.
Got it. Thank you.
So I think we're now going to questions on the phone.
Thank you. If you wish to ask a question, please press star 1 on your telephone. If you'd like to cancel your request, please press star 2. Your first question comes from David Lowe with JP Morgan. Please go ahead.
Thanks very much. If I could just start with the Profile Plus and the implications. So I heard the comments about it rolling out and getting hospital approvals. Would we be right to assume that the first half will probably continue to have a bit of a lagged negative impact as the product's not out in all regions?
So we're out in the US and Germany, which are our 2 biggest markets. We've also gone into the UK, which is another big market. We're progressively going out through Europe, so we expect it to roll out pretty quickly through the first half, through the rest of Western Europe, and get to the remaining hospitals in the US. We always do tend to have a lag into Australia, Japan, based on timing of regulatory approvals, but the majority of our developed market sales. Profile Plus will be available for the majority of our developed market sales pretty quickly in this half.
So first half is pretty normal then, obviously not necessarily a good comp last year where you didn't have the product for a period. Would that be fair?
I think I understand your question. So yeah, look, the Profile Plus will be available in most markets through the second half for sure, for most of the first half. And remember, just in terms of what we're cycling, from last year for the US, the first 2 months were we retained our share. It was from sort of September on that we lost some share in the US in terms of the comparable.
And if I could just follow that up with Dig, I mean, what is the learnings from the Profile Plus and not having an MRI-compatible device? I mean, it's all easy with hindsight, but what would you do differently, or what would you like to do differently?
Yeah, look, good question. Look, I think a few comments on that one. The first thing is that our competitors should be looking for holes in our product portfolio and trying to exploit them. And that's what they should do. That's what they do. So one of the things we got to do is respond quickly when that happens. I think we did that. We do look at our product portfolio going forward. We look at what we believe our competitors will do going forward, and we try to anticipate where there might be a hole. I think we can say that we are more rigorous in that assessment going forward than perhaps we have been. And I think the other thing that we learned out of this, which is good, is that over the last 4 years up until this year, we had a very strong product portfolio, some very good product launches. We had been gaining share on the back of those launches, and what we had to do in the last year was sell when we didn't have a full deck of cards. And I think that's been good for the organisation and good for focusing us on what really are our strengths and enabling us to improve the strength of our selling capability around the world.
Great, thanks very much. If I could just squeeze one in for Brendan, just on I heard the comments about cost management, and we did see sales and marketing. You continue to invest there, but admin, as you say, went backwards. What do we expect for FY20? I mean, do you end up having to rebalance for that after you squeeze everything tightly, that you get some of those admin costs come back? Anything we should think about with those expense lines, please?
I mean, as the guidance says, we're maintaining our profit margin, so that will be our focus, and we'll always do that. So we will flex wherever we can in that area. I was really happy that we didn't pull back on the sales and marketing and R&D, but we won't get those benefits in admin next year, as you pointed out. We do have more depreciation coming forward as well, which will probably, a lot of that will go through that line. So overall though, I think if you just look at the total operating expenses, just thinking in terms of the net profit margin will remain the same. So in terms of any modelling or anything like that, let's just keep that net profit margin the same, and we'll balance in between.
No, you certainly make it easy for us with the modelling, but thanks very much. I'll leave it at that.
We have worked very hard on those savings, I can assure you. 200 contracts we've reviewed, and we put out a lot of cash. But you start into, we've got the low-hanging fruit first, so it's a bit hard to get the next lot.
Thank you. The next question comes from Chris Cooper with Goldman Sachs. Please go ahead.
Hi, thanks for taking my questions. Just beyond the market share dynamics, can I just ask one on general market growth? I mean, clearly you've talked to some of the challenges you've seen in Europe and the emerging markets today, but can you just give some comment on the US? I mean, it seems to us that, if we sort of add up you and your competitors, the US situation isn't quite as rosy as we've seen in the recent past. Can you just provide some sort of commentary around that, please?
Yeah, Chris, thanks for the question. Look, I think that's right. I think, in the US, where we have a very significant share, if we don't have a feature that is getting promoted and that some customers want, then that will have some impact on market growth. And I think we saw that in the last year.
Okay, but beyond sort of the lack of a free Tesla product from you guys in the US, you believe the market otherwise is sort of as it was through the last sort of 2 or 3 years?
Yeah, look, we continue to see good growth in that market. So, as I've said, the core of our focus is on the adults and seniors. That's very clearly the fastest growing part of our business right around the world. We continue in the US to work with our direct-to-consumer strategy. We continue to expand the Cochlear provider network. Those things are meaningful, small but meaningful contributors to our growth and of growing importance. There is, as we've said over time, still some opportunity to grow in children. The penetration in children in the US is between 50 and 60%, which is below many other developed countries. There's some sort of structural reasons why that's the case, but hopefully over time we can break those down. So I'd expect, yes, the US market to continue to grow, and the growth rate in the US was, we would say, probably a little bit slower in F19 than previous years, and I think it will move back up in 20.
Okay, thank you. And just a couple of quick ones, if you don't mind. So just on CapEx, this year again, you came in ahead of your guidance, and this is the second year where you're guiding to quite a big jump. Can you just remind us, I think you said it on the call, I just want to confirm, the China project, in terms of manufacturing, you expect that to be completed by the end of fiscal 20, and what does that give you on gross margins? And then this very last question, can you confirm specifically what it was within the innovation fund that drove the profit uplift? Thank you.
Yeah, so on the China factory, what I said is the majority of the factory we built and the majority of the fit out completed this year, therefore the majority of the CapEx goes in. We then still have to go through the process of regulatory approvals before we can build significant volumes of product in that factory. So that will take another few years. So you won't see a gain in the gross margin in the near term on that. In fact, actually, with the extra overhead from the factory, there'd probably be a little bit of a drag on the gross margin, not a lot in the scheme of our COGS when we first start production. So that was the first part of the question. The second part? Innovation fund.
Just on the innovation fund.
Yeah. So that, Luke, we can say this because it was public, it was in the newspaper. That was Saluda. So Saluda did a capital raising late in the year, and they did that at an increased valuation, and that was the driver behind the increase in that value.
Got it. Thanks for the help.
Thank you. The next question comes from Sean Laaman with Morgan Stanley. Please go ahead.
Thank you. Good morning, Dig. Good morning, Brent. I have a question on the upgrade cycle. I know there's been a lot of focus from the company to really drive penetration compared to past cycles. But Dig, is there anything you can tell us on what you've been able to achieve so far on the penetration of the N7 upgrade cycle and what you might have seen in the past? So
we have increased the penetration by a few percentage points over what we've seen in the past for the same stage. So that's encouraging because of the work we've done on trying to connect better. We are getting later in the cycle, and so we expect to see continued growth in services, but not at the same rate that we have seen over the last few years. And obviously our goal is to continue to expand that penetration, and we continue to experiment and learn and find better ways of doing that and learning across from practices in different countries as to what's successful and what is not. It's a core reason for building Cochlear Family is to enable people to connect better with us. Now, I think the benefits from Cochlear Family is actually 5 years after we sign people up to it, when they, either if they're new, become eligible for a recipient, or if they've just come in now because they get an upgrade. So the growth in Cochlear Family is important, but it's not a short-run driver of increased penetration, but I think it will be a longer-run driver.
Sure. And one more, just how significant is this 532 study in terms of, wrong word, but strong-arming sort of potential recipients, into the pathway, or is it just another part of the ongoing arm wrestle in trying to crack the channel?
It's certainly, I think it is the most significant study that we have done. It is though part of the ongoing work to build a clinical path from hearing aids to cochlear implants, and being able to measure directly quality of life and hearing performance and satisfaction with hearing from people when they've got 2 high-powered hearing aids before they get a cochlear implant, and then after they have a cochlear implant or a cochlear implant and a high-powered hearing aid, and see a very significant difference. Hasn't been done before, and I think is very important both for payers, for consumers to have confidence, and to be able to, for us to be able to educate the hearing aid channel on the outcomes that people can achieve with a cochlear implant or a bimodal solution. So it's an important study, but it's a step on the path as we try to expand that adults and seniors segment.
Okay, that's all the questions I have. Thank you, Dig.
Thanks, Sean.
Thank you. The next question comes from John Deakin-Bell with Citigroup. Please go ahead.
Good morning. Just wanted to ask a little bit more about China. Obviously, it's going to take some time before you've got the plan up and running, and it obviously you've been less successful in China than you've been in the rest of the world over time, which is unusual for your business. Just can you give us a feel for what the strategy is to get some of those tenders back in people using your products?
Yeah, so China, I think firstly the national tender is becoming a much less significant part of the China business than it used to be. For a while, earlier on it was half the revenue, and then it was half the volume. Now it's less than half the volume and less than half the revenue. What we're seeing is some of that tender money being devolved more to provinces, but there's the private pay market, which is really where most of the volume and definitely most of the value is derived in China. The key for us to be successful there is to get people on the ground, to make sure that we have strong relationships, that China is many large cities, and we've got to get people into these cities who are working on a referral path and getting people into hospitals. That's what we've been investing in, and making sure that we have a strong product portfolio there as well. So China is very much a long-term play. And that's where the factory comes into that as well. It has been a market, the private pay market has grown very significantly over the last 20 years, over the last 5 years, but it still has, the potential is all into the future still for China, and we're making sure we're set up to take it. John, I think that answers your question. So if that doesn't...
That doesn't. Look, I'll just ask one more, given the others have just so we're clear, You've relaunched your MRI compatible product. You've obviously lost market share for six or 9 months in the US. How does the conversation between the salespeople and the surgeons or the audiologists go? I mean, is it as simple as back to business as usual, and all of a sudden 2/3 of implants are yours? I mean, just can you give us a bit more colour on that process to winning back the market share?
Yeah, look, it is very much, it varies a bit by market, but it is very much takes MRI off the table as a discussion point and gets back on hearing outcomes. MRI is actually a negative selling point in a sense. It's highlighting the risks of getting an implant, not the benefits. People get an implant because they want to improve their hearing. And what us having the Profile Plus does enable us to focus the conversations on the benefits of perimodal or electrode rays, on the outcomes that we see with Nucleus 7, on the connectivity and the streaming that comes with Nucleus 7. They are very strong selling points for us, backed with evidence, and that's where the conversation goes back to after initial explaining, here's our MRI. Look, people anticipated, people expected that we would be bringing a 3 Tesla compatible implant to market, and on the whole are pleased that we've done that.
Right, that's good colour. Thanks, Dick.
Thank you. Your next question comes from Saul Hadassin with UBS. Please go ahead.
Thanks. Good morning, Dig. Good morning, Brent. Dig, maybe just to push the Nucleus Profile sort of recovery question a bit further. So in the slide pack, it's mentioned uplift in sales in the US post-launch and also sales returning to growth in Germany since launch. Does that imply growth for the first couple of months of since launch is up on the PCP period, which was a normal period of considering the competitors hadn't launched? Just some, I guess, additional colour on, are you actually seeing return to, say, market growth in those two countries now?
Okay, yeah, okay, understand the question. So just a bit more colour on Germany is that in Germany the MRI had been there for most of F18, and we have seen an uplift in our sales since that launch. Over the period before the launch and over comparable. So in the US, we have also seen an increase, and that increase is more significant, obviously, over the few months before the launch than it was July on July, given to your point that MRI compatibility wasn't an issue in July last year, or was it July and August last year. But we have seen growth.
Okay, thank you, Dig. And Dig, if I could just ask you on the new osseointegrated device, that steady state device, can you just describe or give us some more detail? I assume it's for conductive hearing loss. Is that the case? And how does it differ from BAHA?
So it's for conductive or mixed hearing loss. It's a piezoelectric stimulator, so that it's an implant. I won't say too much about it, but I can say a little bit about it. It's an implant. What we've seen in the trials is it gives very good power output across a very broad frequency range. The thing about acoustic hearing is it's really natural hearing, and provided you get power output across a broad frequency range, that delivers best natural hearing. So that's what we're seeing in the study. The surgery is relatively simple, and very importantly, the cosmetics of the device, the appearance is very attractive relative to the alternatives, and that's why we're getting very strong feedback from both the customers in this trial and the surgeons who have been involved.
Does it expand that patient category within the conductive and mixed hearing loss segment, or does it cannibalise BAHA?
We think it will expand the category. I think there'll be some cannibalisation, but the penetration of acoustic implant BAHA into conductive or mixed loss is very low, and probably even lower than cochlear implants. And I think the form factor of the device is certainly part of that. And by having clinical results showing outcomes, it gives us the opportunity to talk to more surgeons, talk to more ENT surgeons that aren't necessarily involved, certainly with cochlear implants, to be able to expand the surgical outlets, surgical clinics. So we expect to see this expand the market over time. Now, any market expansion takes time because there's education and training and so on, but we do see the strong potential to do that with this product.
Thanks, Dig. And if I could just squeeze a last quick one in for Brent. Brent, just look at the other income category. There is a line item there that's called other income that's up $3 million from last year. It's up to $5.5 million. I'm just wondering what that is, and is that recurring other income?
We just got some grants and things like that from different countries around the world. Sometimes I wouldn't say it's all recurring, depends on the year, and so I would back out a little bit if you're worried about recurring.
Thanks.
They're mainly in Europe, and they're a bit lumpy because it depends on when you submit them and so forth.
Okay, that's very helpful. Thank you very much.
Thank you. The next question comes from Steve Wheen with Evans & Partners. Please go ahead.
Yeah, good morning. Just back on the guidance, I'm just curious with that contingency provision around cycle reversal, you haven't kind of put that, removed that from from your earnings to come up with an underlying number. Just curious as to why you haven't done that, and therefore I guess the underlying growth rate for FY20 is perhaps a bit stronger because you're not expecting to have a similar provision in FY20 by the sounds of it. Is that correct?
Yeah, yes, you can certainly. We haven't removed it because you can do that. We've called out the amount. And as I said, our guidance is set assuming that cycle achieves the revenue hurdles, and therefore that money goes to the vendor. Now, if that doesn't happen, as I said, we would look to pull spending forward, pull some future investment forward to invest into the future. But
okay.
Yeah, so I think your underlying premise is accurate.
Okay, great. Just also on that litigation, you've got the provision, I guess, for the legal costs. But where are we with regards to the progress of that and determining a potential payout?
So the appeal is progressing. There's a process of exchanging briefs. We submit brief, they submit a brief, we submit a brief in reply. That's all in process. We expect the appeal hearing to happen during the financial year, and likely that we will see a result of the appeal in the financial year. But that's obviously the timing of all that is beyond our control.
Yep. Okay. Great. On working capital, obviously there's been an inventory build. Given your optimistic, well, not optimistic, but your strong rebounds that you're expecting in growth, would we expect a release of working capital therefore in the next half as you can deploy that inventory?
Yeah, it'll come down. There's a little bit of Brexit probably in there as well, so we've just got to allow for that. And as Dig mentioned before, with the distributors, we took over a couple of those. So that inflated. There's the big one's Profile Plus, but that will all be sold, obviously, a lot of that in the second half, in the first half.
First half, yeah.
Yeah.
And then just finally, the potential of the streaming capability on Android phones. What's that look like? And did you narrow that impediment to users of Android with your interim step, or is this a quantum leap, and therefore you could expect some uplift on the back of it?
Look, it's certainly an important step forward. So the streaming from Android's phones will work in the same manner as it does from iPhone now. It is for this streaming to work, it does need the new release of Android phones from Google, which I think happens probably around the latter half of this calendar year. So can't stream from any Android phone you've got now. It needs the new phone, new firmware. But in terms of how it works, or in terms of the functional performance, same as from an iPhone. Look, I think it's certainly a very important feature to have. I don't think we have seen an inhibition in the take-up of Nucleus 7 because it doesn't have Android streaming. It's a good positive rather than people have held off from either choosing Cochlear. I don't think anyone's held off choosing Cochlear because we don't have Android streaming, and equally from an upgrade perspective, I don't think people have held off because it's not there. It's just an important feature to add going forward from a improved connectivity and improved hearing outcomes for more people.
Okay, great. Thanks very much.
Thanks, Steve.
Thank you. The next question comes from Gretel Janu with Credit Suisse. Please go ahead.
Thanks. Good morning. So firstly, just on COGS, it declined 6%, but revenue was up 2%. So are there more manufacturing efficiencies to be gained here? And can we expect further decline in COGS in FY20?
I think, as we mentioned before, it's been about 3 or 4 year effort there, and we have squeezed it pretty hard. There's a bit of mix in there as well with the processors compared to CI, so get a little bit of a higher margin there as well. And Dig alluded to the fact when we go to China in a few years' time, that will probably dilute the gross margin a little bit while you're ramping it up a bit in about 2 or 3 years' time. So we've squeezed the lemon pretty hard on the COGS, and I think we're not going to see a big improvement going forward, but we will work on other areas of the business to get efficiencies.
Thanks. And then just on the unit sales this year, what was the proportion of adult versus children, and how strong were the unit sales growth in that adult market?
Okay, so that proportion varies by country. So Australia, the US and Germany, about 75% of our system sales, 70 to 75% is adults, seniors, 25-30% is children. Across most of the rest of Western Europe and Japan, it's more like 50-50. We have continued to see that the adults is across developed markets is the fastest growing part of our business, and a faster growing segment than children. And across emerging markets, it's virtually all children. It's sort of 90+% of our sales into emerging markets are children. And as we talked about, I think there's very strong long-run potential. That market continues to grow, but the consistency of that growth, it won't be consistent growth as we've seen over time and as we've seen this year, but over the long run, that growth is there.
Okay, thank you very much.
Thank you. The next question comes from Leanne Harrison with Bank of America Merrill Lynch. Please go ahead.
Good morning. Thank you for taking my questions. The first one is coming back to the services revenue, up 14% this year. You mentioned that the processor revenue will start to fall off a little bit. Should we still be expecting double-digit revenue growth from services for 20, or is there a chance that might slip into the single digit?
I wouldn't expect double-digit growth. If you look in the second half, I think we had 9% growth in services in the second half. We're cycling 2 very big halves as well. Yep. So we expect growth, but a lower rate of growth.
Okay, thank you. And then one last question on, I guess, pipeline of products. So you mentioned you've got an exciting pipeline coming through, and you mentioned the acoustic. You called out the acoustic device. Should we be expecting, or what should we expect, sort of first half, second half, in terms of new launches?
I expect to watch the ASX website for our releases. So that's a bit of a facetious answer, but we're not going to give guidance on timing of launches or the products that we may launch. We've talked about Osia because it is public. There's clinical studies. It's available. There's public knowledge of that product. That's why we're talking about it. But we're not going to talk about other things that are not yet public.
Okay. Thank you.
Thank you. There are no further telephone questions at this time. I'll now hand back to Mr. Howitt for closing remarks.
Okay, no more questions. Well, thank you for joining us.